Great. Hey guys, thanks for joining today. I've prepared a little bit of a process just to give an idea of how I utilize the tools, and I'm going to give a rundown on a quick brief on the each individual process of the strategy that I uh, fundamentally use on a daily basis and how I use the tools. So as Seth actually indicated last week, which was a really good addition. So using the Scanner X Live helps to understand your bias in terms of what the market is doing. And now what the Scanner X does is that it looks to find in relation to the pivots. So your pivots are always where your range in terms of highs and lows are for each token, either on a monthly, weekly, or on a daily, and where price is in relation to that. So, for instance, 8%. It's bearish at the moment, so price is literally 8% below the monthly pivots. And here on the weekly, it's the same thing. You've got 34% of prices above the pivots, the rest is below. So this is 8% above the monthly pivots and the rest is below, and same as the daily. So this in general can help you just to understand where price is in relation to these ranging middle positions of price in general. So on using this, it helps to knowing that it's bearish to rather have a look to see what the market is doing in a manner where if it's not really pumping to on a weekly or a daily, then obviously just to have a look to see if you can find reversals on a high time frame for shorts. That's how I take it. That's what I'm going to be using it for. So I'll show you how to use it from my perspective. So the thing about the Scanner X as well is it's very two different kind of tools that are used. It's the Scanner X actually uses the ranging pivots and searches for highly compressed prices just before it indicates that at those positions, usually price is ready to move into an expansion. So there would be very little movement in the tokens usually at this point. So, and of course, at that, you can always look for those pivots and then potentially try and catch the expansion to either the upside or the downside. And whereas the EAX, and this is our other scanner tool, the EAX is actually the opposite. So this actually collects and fundamentally first uses the tokens that have actually moved. So in these, generally, you would have only picked up for instance, the expanded tokens that have already hit pivots and then moved to either an extremity of support or a resistance level. So two different ways of trading, and it's cool. You could either catch the one or the other. Very different, gives you options, but it's awesome that we can do both. I want to go a little bit of a brief over the EAX as well for some that may not understand or know it just yet. This graph that you see at the moment, it's all based on, for instance, using the Bybit exchange. So it's pulling out tokens that are top 40 moving tokens from that exchange on the futures, and it's putting it onto a graph in relation to RSI level on the 1 hour. So over here, you'll see based on the top 42 tokens, you have got the average of 51.6. So it's just a little bit over half. And then, of course, your price on these charts will show you where these tokens are in relation to that average. So that's how this up and down works. And this middle section, it actually indicates your high time frame fair value gap. So this would be for any of the SMC users or members who do actually understand how the fair value gap works. In a nutshell, basically, fair value gaps are created through expansion. So when price expands, it leaves an imbalance in price, and at some point, the price actually has to come back to balance. So price is always looking to balance its books. So no matter where it goes at any position, any time, at some point, unless it dies completely and falls off the map, it has to come back and balance at some point. So that's what this middle section is actually used for. Um, when you do scroll over these, it gives you a whole drop down and data list. And all this list is based on the easy algo criteria that we use for our tools that we look for. Of course, for a new member, you would have to potentially go ahead and have a look to see, each one of these tools, how they work and what they look for. And then once you come back to this, you would understand what the data means. But I'll try and show you a little bit of what it means from my side. But of course, can't go into extreme detail with it. Then we get to the swing detection point. This is purely based on SMCX, or the SMC swing criteria. So what this does, it helps to identify when there's been a sweep. So it'll identify the candle. If you can see those candles in the picture, that middle candle would be the candle that actually did make a sweep on the 1 hour. So that swept the 1 hour time frame. And then the next candle, candle 3, would in this case be below. It's showing that the price is below. So candle 3 is showing that it is a reversal on the 1 hour time frame. So this basically, if you look, and this is another one, you'll see that this is on the lower side. That's why it's green. You'll see the candle 2 created the sweep, but candle 3 now is obviously trading after that sweep price, which means it's in continuation. So this obviously would invalidate a swing. So just to show you how these images work. So it will mark a sweep, and then it'll indicate to you exactly if it's swept where the price, the candle 3. You can trade on candle 3, candle 4, an engulfing candle, those kind of things, of course, are all SMC. If you follow the SMC training, it will make complete sense to you. Then you've got your divergence, your filters here, and you can filter through divergences. Now, divergences, in a nutshell, is we do have a tool called the TDIX that can be used to help determine these. The divergences in a nutshell are usually, sorry, can you go over it a bit more so it looks at sweeps? Okay, I'll go back over that now. So divergences are, in a nutshell, an indication of where before price is actually going to move. So it's like how can I say, a warning, if you will. It's not an actual in movement or in motion. It's more just to make you aware, okay, cool, divergence is there. That allows you to prepare for either a slowdown in the momentum of the token, or whether it then will be coming up for a reversal at some position. So that's what divergences are. I like to use these quite well. Key levels. These key levels are all based on this criteria down here. So it will be based on your proximity to previous day high, previous day low, any of these support, resistance, and fair value gaps. All of these are key levels. So ticking this box will indicate, okay, it's in close proximity to key level. So let's have a look to see here. So 3.1% to previous week high is the proximity that it's picking up, and then it's also 3.52% close to a daily fair value gap. So that's why it is pulling through on this actual tool here. And then top movers, of course, you've got the ones that actually have, there we go, 48% and so on. It's the same as actually going to this toggle over here. You can pull up, that on that exchange will give you all the top movers that pull in certain. You see, we've also got a filter here, is that it pulls, you can get all the top movers, but if there is no data that is being pulled in, it automatically excludes it. So it helps. I mean, I prefer to look at these. I know you can just look on the exchange, but these obviously at least give you a little bit more information as to what's happening with it, as opposed to trading blindly if you were to have a look at it. Okay, what else do I want to give you just before we move ahead? These below here, of course, you've got your this 1 hour buyers, 4 hour buyers. These are sweeps. So what these indicate are, so this would be like high continuation. So you'll see there's been a 1 day sweep. That second candle is swept, but it is in continuation still. So the price hasn't dropped below the sweep. If it is a sweep and then price dropped there, you'll see it'll also indicate that it's got a red candle there and now the price is below. So generally, a reversal signature like this will indicate, okay, price could be reversing on whatever time frame it might be. So if you're looking at a 1 hour, you could potentially be doing your low time frame scalps. Of course, your dailies and your weeklies are more your swing trades, but also for your buyers in general. Okay, and then of course you've got your divergences. They fall through on the different time frames. These again are very useful. So that is a nutshell. I won't go further into detail. I am actually going to be making some videos or recordings on each feature and trying to get into extreme detail for members to actually go through, because I know it can look and be very intimidating to most people if you don't know what it is actually telling you. So I will be putting more effort into it, but for today's session, I'm going to give you that, and then we can pretty much just take a few tokens. Before we go in any further, yeah, I've got some questions here. Okay, so Joe, okay. Can you go over it a bit more? So it looks like a sweep. So when you're saying going over it a bit more, I'm assuming the swing point detections. I'll go, okay. So yes, so what it's doing, it's picking up the sweeps. And as you can see on the actual drop-down data menu there itself, it says 1 hour bias low R. So it means that on the 1 hour time frame, it swept the low previous 1 hour candle, and the price is then trading above, which is why it says R. So then it means, so if it does a sweep and then price retraces, that is reversal. It indicates, so SMC is based on, price goes from high to low, and lower time frame sweeps the higher time frame. 5 minutes sweeps the 1 hour. So that's how it works. And that's what all of those mean. So if you look at this at a quick glance, knowing all that data and really, really understanding how the SMC model works specifically and the SMCX works, this will make a lot more sense for you. Okay, then yes, so that candle formation, of course, it will show you, I'm looking on the 1 hour swing here, so it'll only show me the swing on the 1 hour. But if I look on the daily, it's going to show me the daily candles. So here we go. We've got all the sweeps on the higher time frame, the daily. So the candle 2, you'll see candle 3 now there is trading below the close of candle 2, and it has swept on the high. So there we go, swing high now. Obviously now it's reversing to the downside. So yeah, it has swept. Price has already dropped. You can already see on the 1 hour time frame the RSI is at 36, so it could potentially drop and then claim retrace a little bit and then drop continuation to the downside. So that's how the SMC works. But yeah, this is all the training that is in the WAP. You guys, of course, need to go through the training to really, really understand what those terms mean. Okay, and any other, and in the EX bias columns, what is the meaning of high and low and the various subcolors? Okay, so high, swing high. So obviously this would be an indication that you'll see the line at the top. Sorry, what happened there? Just reset. So in that image where you've got the 3 candles, you've got that dotted line at the top. So that means that the higher time frame has been swept. And then of course you'll see their swing high means that their high time frame has been swept. Now it's obviously moving to the low, and then obviously vice versa. You'll see that's the low time being swept. So this is a swing low. Swing lows are in green, swing highs are in red. Okay. And now, Mark, I mean in coin level summary. Okay, coin level summary. What these mean. Alerts. Never know if they actually make sounds when make conditions. Okay. I can go over the alerts, sure. I must say that they make a lot of noise, so it's strange if you don't get noise. I actually muted. But okay, let me finish the first question, then I can ask the second question. So I'll go over this again. These bias uh, tabs here, for instance. So if you're looking to see, okay, I'm looking to see where prices actually swept a week high, for instance, because now I want to try and see if I can catch a reversal or a short. So you're going to look on the high time frame, and then you're going to wait to see. I mean, here in this situation, you've got continuation. However, the price could actually still be retracing. Once it's retraced, and then you get, well, I suppose in a weekly, you're going to have to wait until the end of the week in order for that to actually happen. But your daily, for instance, is usually a good one. So once it closes, candle closes, well, if it indicates that it's showing that there's a potential reversal on the weekly, and then on the daily, it is building up for a reversal. But then you go into the 4 hour, and once the 4 hour closes, it would then start to confirm these as a confirmation of price reversal to the downside. So that's how these bias aspects are actually used. Okay, next question. I don't have alerts set up. Okay, so alerts are in the corner here, and I'm going to be very, very honest at the moment. The alerts are set up in manners that I personally think could be better. So I'm actually manually doing things now at the moment just to like refine, get that really, really awesome like criteria of what a proper alert should be, and then I'm actually going to do an upgrade on it. But let's just have a look how it works here. So you can create alert, and then this will be all coins from that exchange that you're having a look at. And when for instance, if you're looking for the sweeps if you're looking for the daily highs, daily low sweeps, you can tap that in. If you're looking for your divergences, of course, you can click on that. And of course, if you're looking for swing points, depending. So you'd create an alert, and then based on the alert, every time one of these tokens that come through trigger that alert, it would automatically then make this very loud, annoying sound that like I said, I turn off. And you can always go through the log and have a look. See, so you've got your alerts set up, what alerts they are, so you can create individual alerts, and then the log itself will actually tell you, okay, its alert was for an RSI bull, what 1 hour, 1 day, RSI bear, 1 hour, 1 day, obviously date, and what the token is. So that's actually how it works. It's pretty straightforward, but I do believe that I can build up a better alerts combinations. I think what I want to try and do is I want to try and actually get one where it shows like for instance, you can put combinations. So for me personally, I like to look for let's have a look here. I like to have a look for bearish. Let's just see here. There we are. So that's actually Luna 2. In fact, this is the one I mentioned to the guys earlier. So Luna, so it's got a bearish divergence. It's showing 48%, which is a lot of movement, which means that potential reversal could be quite a decent drop. And so I would like for it, and the RSI is 68 at the moment. So what I would like, let me just do something quickly. Okay. So what I would actually like to do is I'd like to create a combination of, for instance, when a bearish divergence, for me personally, and this could obviously be for a whole bunch of different ones, but when a bearish divergence is indicated, and then you have an RSI that at the same time is indicating 80, then it means, okay, cool. There, you've got a price that wants to go bearish and is nearing a position where it will at some point reverse. So generally, you're looking anywhere between 82 and say 90 or 92, depending. You usually get the higher RSI ones when there's been like 100% movement. That's what I found. So I want to get those notifications because it's just going to help me to like not have a look through. I mean, although this is already fast, it will make it even faster for me. It also allows, if I could set it to say like I want to know 75% RSI so I can take it, get it onto the chart. I want to make sure that I do my TA on the chart before I do any form of entry, because I want to make sure that I know that the entry is, legit. I'm comfortable with it. There's enough criteria. I've got enough thumbs up from, all my checklists. So yeah, just a little bit about my idea about alerts and then how the alerts work. Okay. Are you saying where do they get sent? No, they don't get sent anywhere. They stay here. So if you click on alerts and you go to log, they all come up here. But the alerts itself, so you'd have to go into your settings. You'd have to make your system sounds, make sure that the volume for that is quite high, and then just make sure that you haven't got mute on your browser itself. Otherwise, you won't hear it. So I actually mute it personally because it really makes a lot of noise, to be honest. Otherwise, you can just come back and have a look here. I mean, if you do just come back and have a look, obviously you might miss it. But like I said, these alerts are definitely going to be upgraded. It was a great start. This is actually what the developer came up with from his side first. But since I've gone through the whole thing, I've realized like it can be a much better than what it is. So yeah, stay tuned. Definitely doing a lot more anyway. Okay. Yeah, your sounds must be muted. Yeah. I also had this problem in the beginning. Like I was actually started to get like frustrated with the dev. Like, I'm not hearing it. I'm not getting it. And then I actually found that it was muted. So it was my fault. Okay. Right. Here we stand. Okay, cool. Let me continue. The questions are great, guys. Of course, I can just go on and on and on and on and think everybody really cares about what I'm saying. But if they don't, ask questions, then it means they're not listening. So yeah, thank you. Okay, so just to recap, we go just to check the bias on the scanner. Where's my mouse here? Sorry, I've got 3 screens. Here we go. We check the bias. Okay, indication there's more movement to the downside, but I always look for shorts. That's my personal preference. So what I now would look to the chart, I'd actually look to say, okay, cool. What can I find here that indicates there is a potential reversal coming up that I could, chart out and, perhaps catch. And one thing that I've noticed is that it might end up in this top section with the 1 hour RSI. But remember, like, if you're looking at a 12-hour RSI, for instance, the price might be down here. And then if you look at it on a 1 hour, that price will be up here. So it has to go up, down, up, down, up, down, and eventually get to a very high position. That's how price works. So all of these, if it doesn't really show divergence, it doesn't really indicate that the price is completely oversold. It just means for that time frame based on the previous, like say 5 hours, it would indicate that the price is quite high or quite low. So that's what the RSI level is. And again, guys, if I speak too fast and I'm not explaining it, please just tell me. I know that I do tend to, how can I say, my mind works very, very, very fast. And I do tend to just like move on very, very quickly. So, but I'm going to try and do it as slowly as possible. But what I'm potentially looking for here is that I want to look for a price that could, um, sorry, that could be on a bearish movement that has made quite a lot of movement in that day. So 12% isn't too much. So it's not a really, really high one of interest. What I'm going to do is I'm going to pull out one that I know. Luna 2. Let's have a look at it. I know because I actually just, there we go. See ya. So this one's a good one. And why it's good, it's got 44% movement in 24 hours. So one, a lot of movement means potential for a lot of movement to the opposite side. So that's why we built this only top 42 mover tool scanner. Pivots are wide, which in this case isn't really important because we're not looking to expand off pivots. The the daily bias is so it swept the high and it's in continuation. So right now you can see that the price is obviously now expanding and could potentially be leaving fair value gaps and getting exhausted. The RSI of 67 could indicate that either it has come down a little bit or it is still building up to a position where it will come down. What else can I read? The proximity to the previous week high is 12.45%. And it's not indicating that it's swept. So this would assume that the previous week high is above the current price of where it stands right now. So the previous week high, previous week low, based on SMC is usually considered quite a sweep high, sweep low. That's what it does. It's a very good indication for potential reversal. Generally, price reverses after a sweep. I mean, that's one thing. No matter what entry model you look at, you must ensure that wherever the sweep is, wherever the price level that you are looking at it has to sweep something. It must sweep. Otherwise, price won't drop unless it sweeps. The sweep will always have liquidity lying in those positions that would give the price reason to drop or turn around or at least to react. So very, very important thing to understand why we look at these sweep positions. And then you've got your monthly support and resistance. So this is close to monthly R3, which is great. And again, for me, support and resistance levels are very, very strong key levels that I like to kind of throw into the mix as well. So for now, let's just take Luna, and I'm going to show you here how we do it. Luna 2. I'm going to create my token watch list over here. Let's see if maybe I'll take like 2 or 3. Area 61.25 USTC. Let's have a look to see USTC. Okay, you can always have a look to see what this one is showing. I don't know if it has moved yet or not. Firstly, I always look here, so it's a good place just to see, okay, RSI is pretty decent. But yeah, it doesn't mean everything that's up here is obviously what you should be trading. Bearish 11%, 10% bearish. Plus T5. Right. I can't pick up anything of obvious note here. So what I'm going to do, then it's to just do lump as well. Okay. So just for me today, that's kind of how I wanted to use it. And again, you can look for any criteria that you want. It's really up to you and how you trade. So I'm going to go ahead and say, let's put Luna and Luna 2. And there we go. Look at how it automatically marked it. I'm sorry, guys. Like I said before, I was saying to the guys earlier, like I've literally marked, like every token probably. I don't think I'm going to find a token um, on this list again that hasn't already been like marked. I've been going quite crazy with it this week. But let's have a look at this one. So we'll do Luna 2. In fact, I'm not going to copy the card to it. I'm going to just keep it on the watch list here because it does actually update, which is cool. USTC, let's have a look to see USTC. Ah, there we go. I haven't done anything to this one. I know what I have. But we can always just go over it again. And 1,000 luck. Right. Okay. Ah, another one unlocked. Okay. Anyway, so look, guys, I have put quite a bit of time into most of these tokens, like I mentioned. And a lot of them I am watching, um, you know, based on, I pull it from the EAX and I try and find those levels indications and I'm trying to see if I can catch it as close to these areas, for instance, but I'll show you what they mean right now. So my next step is what I do is I find the tokens I get of interest, then I come to my chart and I'll put them on the chart. Of course, you can always just find one or two. It's really up to you how many to trade. It does become very, very confusing to try and keep up with too many. I've got a bit of how can I say, obsession for just charting at the moment. So, my mission is different. So, but it's to practice charting. And the one thing I do recommend is that if you get this portion right, if you can really, really take high time frame, mark it perfectly, but using the basic logic of the fundamentals of charting and the key levels, your entries are going to be the last thing that you're going to have to really work on. And there's a multitude of entry tools that we've got here at Easy Algo. So this is my commitment to it. And as an example, of course, this is what I am going to be doing permanently, I think, for the next month, probably. So we'll start. So there's three main key factors that we use, and that Seth has pretty much shown in a way that actually reacts and gets the most reactions out, in my opinion. And the three ways are we look for flip zones, and what flip zones are generally all it is it's a position where price may have at some point been used as a support and a resistance. So it's very, very close to the opposing levels, but of course it's not as precise on that level. So it's a zone, it's a range. And very often you'll see like wherever, you'll mark out, you'll actually see it. Price often reacts, responds, and will come to that position and then react and then go to the next similar one and react and then come back. So it's a very interesting key level aspect that I believe is very powerful. And what I do, I always do it in relation to where the price is currently. So, I mean, of course, I could have done one right here. As you can see, here you've hit your support a few times, and then price broke through. Now, and then at this point, it actually, before the candle broke, it created resistance. So support, flip resistance broke through. Now, price is exactly at that point. So we'll mark this one out now, of course, because that's where the price is. Okay, and then of course, the next one I'll mark as well. And the only reason I'm trying to do this is just in relation. I mean, like, yeah, there's a big fair value gap, but it's pointless me marking out this fair value gap now. Price is nowhere near it. So I'm focusing and concentrating in and around where the price currently might be. Also, please, guys, like I mentioned, if there's anything that you don't understand by what I just did or what I said, please just ask. I'll be willing to let you know. Um, Still working on a monthly time frame, so I'll always start monthly, weekly, 3 day, and then at that point, to be honest, at your daily, you've got those levels like perfectly already. And the more and more you go down into this, it starts to become way too messy. Rather just follow the high time frame ones. Obviously, the ones that tokens that have been around for more than a month. Okay, cool. Got the flip zone, and then at the same time, this opposing level, you'll see right here, this level was a very respected level on the monthly. You can see like that at that point is where price actually flipped as well down, and that's exactly where price, although it swept higher, it's now come back down to as well. So it's a very respected level, it's going to be a very reactive level as well. That's why we're marking it out at the moment. At the moment, right now, those are the levels on the monthly that I'm going to use. Then let's go down to the weekly. Okay, so and there's a big weekly fair value gap. It's already been claimed now, so obviously it's not important to mark it out. If you have a look to see any other fair value gap now, not really. You've already got monthly flip zones, so you don't need to create weekly flip zones. So now I'd say, for instance, the most important part here would be to see where we could actually get a very respected level on. If you have a look here, this level over here, that level gets respected quite a bit. So this is going to be your weekly closing level. Of course, all we're trying to do is get as close to that price position and combination of confluences as we can. So for this right now, to be honest, I'm not going to do anything further. I'd rather just go to 3 day, and remembering that this is a 66 bearish, and you can see price has swept already. So that's obviously meaning right now that price has swept and now it's at 66, but it's still showing bearish at the moment. So let's just try and see if we can understand why. Looking at the 3 day at the moment. So you've got your monthly opposing and your weekly opposing here. So two very strong levels. And obviously flip zones, it's not much more. I mean, even if I do put a level here right now, it's not going to really do anything in terms of higher time frame confluence. Let's have a daily. Okay. So, I mean, this is already printing. This is the indicator. So it's showing that there's a daily order block. And there's order blocks above inside these flip zones. Just trying to see if there's anything else in the daily. Okay, so got a daily fair value gap. Okay, gonna mark this one. There we go. So we got a daily fair value gap inside of, or in between the moment. So if you have a look in price relations, so you've got one, 4 high criteria confidences at the moment, or key level confidences. So this is all where liquidity is lying. So there's your 50% in the daily, your opposing weekly, monthly opposing. Let's have a look. Okay, so now what I'm going to do is I'm going to just show you, just give me one second. Checking out the on the low time frame. So I've got the SMC indicator and I've got the trend X indicator both on. Now, these indicators are on a lower time frame actually are very, very helpful once you've actually done these high time frames. And two reasons I use these personally, and of course there's the imbalance X, you've got the indicator X, which is an incredible tool that I personally still have to master. And all of them, again, like I said, they can be applied. Why I like these personally though, is I've used TrendX specifically to help me to determine where those extreme levels are. So once price has expanded, for instance, your daily level here, I've only shown the daily R3 level. So I don't do the R1 and R2. And for the weekly, I've only indicated the weekly R2, and it actually doesn't show that. Weekly R2 and R3. So these three levels, the daily and the weekly, are very, very prominent to me, as well, of course, as your monthly. So if you have a look now, I just want to see right now. This is your monthly R2 and your monthly R3 as well. So the purple ones, the light purple one and the dark purple one. That's just how I mark my levels personally, to know exactly where those, extreme levels might, correspond with the markings for the key levels, for instance. Okay, so right now, indications, this is what it's showing. Right now, it's showing that there's a previous week high above. There's an opposing level right now. You can see it's actually reacted quite a bit. It's also your monthly. It's used your monthly. If you look in the low time frame, see how it resisted off your monthly and it broke through a little bit and then came back. You see how it's reacting. Price is reacting to this monthly opposing level. So you can see how strong it is. But at the same time, it's not strong enough to actually, like, how can I say, make the price move down with like force. It still has some momentum. So price is being given momentum, but obviously there's a lot of orders here that are helping to keep the price down. That's kind of why you'll see it trading sideways at the moment. So on the lower time frame right now, what's happening is that you've got your opposing levels right now, which you can see prices tapped in opposing, broke opposing, tapped opposing, broke opposing on your high time frame. So that's a very, very strong indication of price reaction. In just above a flip level with the flip level above, and also a previous week high above it as well. So what does this mean? So putting all of this together, how this helps me. Okay, let me go back to Luna. So it's showing me that it does have a bearish. It's showing that RSI in the 1 hour is 69. Okay, so for price to drop or at least make a movement, like you'll see, for instance, when it tapped this monthly, when I marked this out, I actually got this entry as well. But the minute it tapped here, it tapped, and then immediately the price was obviously pushed down by limit orders or something. It was high enough inside of a flip level, and obviously high enough for sellers to want to sell off. At that point, it dropped, and at this point, I think the RSI on the 1 hour must have been about 85 or 87. Dropped down, recollected itself. You can see it's actually used the monthly, yes, monthly support no, actually it's the monthly resistance 3 level. It broke through, tapped, and now it's flipped that resistance into support. So it's now obviously going and moving to a higher time frame because price has obviously dropped quite low. So now it's moving to the upside. So it's used this level. From that level, it's rejected. Now it's come all the way back and it's now responding on these key levels. But the RSI is now currently on 62 on the 1 hour. So when you look at that, if you want to have a look at an entry, of course, your entries are going to be really dependent on what your preferences are. Like if I had to, for instance, look at the SMC, let me just see if it is. Right.
Also, on the 1 hour,
So let's have a look
it's
here. So right now it's still showing that it's strong bullish momentum on the it's a 4 hour chart, looking at the 15-hour 4 hour chart. And it actually hasn't created, because it hasn't swept this previous candle now, it hasn't created a CISD at the moment. So price would need to sweep this high and then drop below in order for the CISD to actually form. Also, when it's like this, it shows that unless price actually engulfs this candle and drops below, it indicates that it's still in continuation. Sorry, but there is one on the 1 hour. There is
yeah,
one.
there's a CISD on the 1 hour.
Yeah. Okay. So what this does, so I want just to help you explain how the CISD works, right? So even though there is no CISD from the actual software at the moment, right now, that sweep over there, if I had to just take the 15 minutes, I could mark this as my CISD level, even though there was no sweep. But as long as there's a failure to displace, that the software itself only actually creates CISD once there has been a sweep on the higher time frame that you're looking at. So if you, for instance, if you like now, it won't show there. You see the sweep over there? It indicated that's why it showed that CISD there. But right now, it's not showing any CISD because it didn't sweep that previous candle. So the CISD markings that the software actually does print. You see the 1, 2, 3, there's a lot of them, but you'll see each time they've swept. And that's what triggers the whole logic of the actual tool itself, the CISD. But CISD in general can just be marked out. If you find a level, for instance, that let me see now. For instance, you 5 minutes. Just want to make something more realistic here, so it's easier just for you to understand. Okay, so let's consider the series of candles that actually pushed, for instance, over a key level. I could just mark, there we go, CISD there. So for me, I'd only be happy, for instance, if price closed on this time frame 15 minutes below that point. That can be my CISD, even though it didn't make that sweep, if you understand. So it swept a level that I was happy with. And the CISD level is an indication when it breaks, it shows that it's a change of structure to the downside. I hope that helps. Of course, this is very like deep SMC training. This is how you learn how to train before the tool itself. So it's a very, very, very good base structure to learn, in my opinion. Okay. But yeah, you generally can find the CISD levels on other time frames. Makes it easier. As long as the biggest aspect that's most important is that, to catch a reversal, it has to, it has to sweep a level, a key level of some sort that after you've done your marking, is good enough for you to believe that, okay, I don't think price can move past this point. The RSI is very high and it seems to have been moving like too powerfully. It's made a lot of movement, whatever your conditions might be. I mean, CISDs are going to constantly like show itself. There you see it presents. There's a bullish, for instance, creates bullish, doesn't close. So although it creates a CISD, it will make a turn. So if price drops below and closes the CISD, all it's doing is showing you that the price is sweeping the previous high time frame candle. So it'll sweep this point and then it'll sweep that point. It'll sweep that point, it'll sweep that point. That's what it's telling you, right? But if you can catch that sweep point on inside these areas, for instance, these fair value gaps or your high time frame flip zones or your other key levels, your support extreme R3 support or resistance 3 levels, anything like that. And it makes a sweep and it drops, closes CISD. That's an entry model. That's one way to do it. And it's a very simple way to do it as well. And I believe, if you don't have a specific one, this is a really, really good model to do. But at the same time, it's not the only one you have to use. You can also, trade purely off just divergence, of course, and you can trade off just using MA. Of course, once the MA lines change and so on, or your fibs, those are entry levels as well. But yeah, this one's a very simple one. I think, if anyone's learning trading, yeah, this has got to be the number one thing you learn. Okay, so back to I do tend to go on a tangent. Okay, the sweep box is also very helpful too. The sweep box. Let me just see. Are you referring to?
It's the one on the bottom right now. You're looking at it at the bottom right. So it shows you where you have a shape. So you have 15 minutes and 30 minutes bullish shape at the moment. So if it's bearish, you will see the 1 hour, the 4 hour, the daily, the weekly. Without even looking at the CSD, you will see on the sweep box on the bottom right of your chart that is showing there's a bullish or
Yeah,
bearish
this
shape.
one. I see.
Yeah, yeah,
Yes,
yeah. It's
of
quite
course.
helpful.
Sorry, man. I personally, actually, I was so excited about when we discovered this, and we got the developer to start doing this, and then while that was being made, I found this and I did this. So when this came out, it wasn't such a big hit for me. Anyway, but yes, it also does show you like on what time frame there has been a sweep indication. So this would actually, the green shows that the price at that point would be, there has been a sweep on the higher time frame, and let's see the 15-minute. There we go. But it says 15 minutes. The 1 minute, 15 minutes. 1 minute.
Well, where I find it helpful is sometimes you zoom out too much or you zoom in too much, and you may not see the physical shape happening on the chart, but looking at the shape box, it will
Yeah.
tell you where the shape the. I don't use the 15 minute or 30 minute because too much noise there. I use 1 hour and above, maybe 4 hours.
Yeah.
Yeah,
See, I just
yeah,
shifted it. It was green
yeah,
now, right, red. So the
yeah,
price is
but it's very
obviously
helpful,
above and
man.
then it's below. Yeah. No, it's
Mm.
a very good, very, very good point. I mean, these tools that's what it's for. Um, but of course, the higher time frame is most important. Unless you understand what's going on in the bigger picture, like looking at the molecules aren't going to make any sense to you. If that makes any sense with an analogy. So, yeah, right now, of course, this is in a region at 62. At the same time, you've got two very high closing levels that could be, reason enough in order for price to, how can I say it, to turn. My anticipation, of course, would be because it's a 62% at the moment. Let's just have a look to see, and I will refresh this. Okay, so look, Luna, 66. Okay. So at the moment, it looks like it's in accumulation. So I don't know if anybody or everybody knows about accumulation. At this point, jumping in between these two levels, obviously it's, how can I say, building up liquidity at the moment. Or perhaps it's already built liquidity. I have no idea. So it sweeps, 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 sweeps. There's a lot of orders here lying in between these two key levels, monthly and a weekly opposing level. Because it's at a 66, I preferably like to wait for a higher entry. Sometimes, and I'll be very, very honest with you, and it's not something that I'm saying that you should do. Sometimes when the price reaches these, for instance, like when it reached this monthly opposing, as it tapped that monthly opposing and as the price dropped, I entered. That's just my frame. And I entered as I entered, and I entered on the 1 minute time frame. Let me just show you here. I entered on the 1 minute time frame. 1 minute time frame, and I put my stop loss. As it dropped, I put my stop loss right there. So if anything, I don't lose, I can get a scalp. Price dropped, it started showing a little bit more momentum to the top. I exited. I think I maybe got about 40% or something out of it. It continued, so I left it. Once it gained support here and it started increasing, then it was showing me, okay, cool, it's going for another resweep. When it swept here again, and also remember the RSI yesterday was different to what it's showing now. So it was showing in the 80s. When it came to this point and it swept and then dropped below, I entered again. And price dropped, I put my stop loss. So why I do this, and of course, sometimes, you'll hit your stop loss. And please understand, this is just my preference. And I only do it in extreme, key positions, high RSI when tokens have moved, because sometimes price does, like there, it didn't even tap, it dropped, for instance, and it could have just been the reason it completely fell right to the downside. And I've actually posted quite a few images with that in the group, I think, in the past 2-3 days. So yeah, you never know if it's going to completely run out at any point, and that's where the price just decides. So I like to scalp it, but I also don't stay in for too long. If the price is not in a position where I'm completely happy that I can't see it going any further, then I don't just leave it. I'll scalp it, and then, okay, cool, get to another position. I'll see here it swept, and then it started sweeping even these higher levels. Once it swept the higher level, started dropping, did the same thing. Stop loss. And again, this one, I think I actually got stopped out earlier. But yeah, as you can see, this is just a model that I use. I did post, like I had a little bit of a battle with Zeus yesterday. And it was a good example if you have a look at all those entries. Some 37, some 15, some minus 20. Like there was a mix of them, but all in all, I think there was about 300% profit that I made. But that was a very difficult one because it had no key levels. So this is just another entry model, for instance, okay. Sorry, going off on a tangent here again. Right now, this price is accumulating in between these two opposing levels. There is another flip level area where there's a lot of liquidity above it. It is a previous week high, which makes reason for it to sweep again. And also there is with the RSI being low, you're still waiting for the price to turn on the 1 hour, at least in the 80s somewhere. So I'm expecting it to at least do a sweep around these areas right now. The only time I ever, for instance, I expect price to reach the daily R3 or the weekly R3 or R2 is if there's a super narrow. So if this was a super narrow daily, I would then say, okay, you're looking at this level because price usually expands the most and reaches R2 at least, R3 very often. Just my observation. So it's a very good tool to have in combination. Cool. I'm going to leave this one with you guys. In fact, what I'm going to do now, I'm going to just copy link and so I just want to get the I'm going to have to do it after. Sorry, my screen's actually all stuck there. But I'll copy this and I'll put it into the group just for you guys to work with. Let me move over to the next one. USTC. So when you actually do a hard reset, it completely wipes them away in STC. And then 1000. Okay. Let's have a look see. I entered this one yesterday. Yeah. So it tapped into this region over here and dropped at a nice entry here. Anyway. So price, I mean, it generally then always wants to come back into these flip zones as well. So the flip zones on a monthly are really, really powerful. So let's just go back to the monthly. Let's have a look at this token right now. Price has dropped quite a bit. Those are all higher time frame price. As you can see, a monthly. I'm going to work around the price currently. So I just want to get this that's going to be your monthly. Okay. I'm going to expand this. Actually got a value gap over there. Okay. Okay, so I'm just marking out fair value gaps. I'm working out the opposing levels. And let me see if I can actually get, I can actually. So if you have a look here at the bottom and the price was supported and then resisted. So this can also be monthly. Cool, so you've got your opposing monthly flip above it, fair value gap. I hope all of this makes sense to you already. I mean, it's not too complicated. Let's have a look to see. Obviously, those markings are above from yesterday. Okay, then I'm going to have a look to see on the weekly, where are we right now? Okay, so this is still very, very high confidence period here. So price tapped into, that's a monthly R3 there, if you can have a look there. So the monthly, it swept, and then now it's tapped into monthly R3 and reduced. But that monthly R3 is right at the bottom of the monthly flip zone. Just an interesting observation to notice. I want to go into a lower time frame. Let's have a look to see what we can find here. So you've got a weekly fair value gap. In fact, you've actually got a 3-day fair value gap over here. This one. Let's see. So on your 3-day, you've got a 3-day closing level. Let me just see. You can have a look right there. You see that it actually taps in quite a few times now. So that 3-day opposing level goes all the way back there. So I'm going to mark this out as a relevant position. 3-day. Again, all we're doing is we're trying to build some framework around where the price currently is. And, you know, if there's enough areas of confidence or key levels, then we could potentially watch for some change or reaction. Okay, having a look, I think for now that's enough. Let's have a look. Yes, I remember I put this on instead. Yeah, this is the one I created yesterday. I tapped into it. Oh, I love how these things work, man. They really, really work so well, guys. I'm really, really enjoying it, I must say. I don't know if that's a narrow. At the moment, it's swept through the monthly, but I can't see. Yeah, you've got your weekly pivots. Let's have a look to see on the 4 hour. Okay, so you've got prices above pivots. It's above previous day high. It is. You'll see how. Look how on the 4 hour it's actually rejected off that R3 level, monthly R3 level. But also that same R3 level is on your 3-day opposing level as well, and right underneath your flip zone, your monthly flip zone. So it's a lot of area that it's rejecting off. So price at the moment, of course, is coming down. Let's have a look to see what it was saying. Bearish 66, I think. Currently now it's going to show a bit less. Let me just refresh it. See what it looks like here. Here we go. So the pivots are fairly narrow, the dailies. And because price, if you have a look right now, price rejected will come back down. I do believe that it could either find support here on the previous day high or pivots or on this monthly too. So rejected, come back down here at some point, and this area over here where you've got a fair value gap, it's got to sweep through these key levels as well, right? And it's got the R3 over here, the daily R3. So there's a lot of reason and how can I say momentum based on the pivots on the daily that could be, pushing or giving some how can I say, some volume to price in the bullish manner that could potentially break these regions. However, it's always good to watch to see if price then supports off here and then starts moving in an upward position to see how it reacts in this position over here. There's quite a lot of key levels up here. I don't believe it's going to go straight for that previous week high. It needs to break through quite a lot of other key levels here that would most likely move the price down. Sorry, I just want to go back and get the USDC bearish. So it's showing bearish on 2 high time frames, the daily and the 12-hour. Obviously the fair value gaps we've marked out, reversal on the 4-hour, RSI 58. So it is dropping. Price is going to drop. Of course, it's responded, it's reacted pretty much off this. I mean, all of these levels over here just shows you how these levels work. I marked these levels out before we got to this position, and look how accurate they are. So yeah, just watch how price responds here, and then if, for instance, it does make a move to the upside, just set some alerts. So I'm going to set an alert, for instance, over here, and I'm going to watch to see if I can't potentially catch another sweep into this area and move to the downside. And it has moved 26%, so it could be a decent move, a decent movement to the downside. Okay, that one's simple enough. I'm quite sure everybody can understand the purpose of what I did, why I put it there. I'm going to move on to the last one here. Okay. This look. I think this is another one I actually traded this as well. Yes. Traded the whole list. Okay, let me start again. I've already set alerts for this one, of course, having worked with it.
Sorry, I missed where you're setting the alert. Is it above the previous week high at the other level on the last coin?
On the last one here. Yeah, look,
Yeah.
it doesn't necessarily, like, I'm not putting it at a specific, it has to be here. I just want to give myself some time to, once I get the alert, to come back, have a look, prepare everything if I'm going to prepare for an entry. So it could be anywhere. Like if I, for instance, okay, cool, I want to give myself more time, I'll put the alert there, So it's really just to try and make sure you catch it. I don't want to be alerted when it's done, then it means I'm going to get bored waiting another hour potentially before it comes anywhere near. So it's really, if you're at your desk all the time, you could possibly set it higher. But sometimes I'm not, I'm sitting in the lounge chatting with my kids or something, and then I get an alert on my phone. I'm like, bail, quickly run to my computer. So yeah, I mean, it was not for no specific reason, basically. Let's have a look at this monthly here. Sorry, I don't know if you guys hear the wind, but it's really good. That's Cape Town. Okay, so I'm going to use this. Is support. Here's resistance. So you can see I only made this one yesterday because obviously price was a bit higher, so there's no point. But now because price is reduced, you see here. So in fact, like you can actually, you see, you can use this over there and to down that point as well. It's really interesting just to make it more refined if you wanted to. But yeah, I'm going to use this region. It's quite a strong region. You can see if you pull it back, get a few, see how the price responds, steps in. So yeah, it's a very good level. Okay. Monthly. Right. Then over here, I'm going to get a monthly opposing level. You can see this is quite a strong level over here. I'm just going to mark it out, more relevant to where the current price is. Just want to see what else I can find here. Okay, so price is low, so I'm not going to bother with it now. Okay, so no fair value gaps at the moment. Got the moment fair value gaps up there, it's fine. Let's have a look in the weekly. Okay. So you'll have a look on the month. It's actually hovering around the monthly opposing. It's broken it, and then it's just above. So it could actually use this as a support, for instance, because there is obviously still more liquidity at the top here. Let's see what other level. Can actually put a find them level here. Oh, yeah, it's actually just what it tapped into. Weekly opposing. Okay, I'm just going to put a weekly opposing there. All right. Let's have a look closer. Uh, yeah, so if you have a look, even just at the Trendex at the moment now. So Trendex, you've got your weekly narrows there, and you've got your, I mean, it's so small there. It's your R2, R3. And look how that expansion happened. It's a massive expansion. Super, super massive expansion. So I'm actually going to just put this out below. And this is going to be a fair value gap that's below it. So it expanded, obviously retraced now, and it's found support. See there? And that's on a monthly level. So that's monthly resistance 2 that it found support on. And now it's obviously looking to go to the upside. I'm going to go back to the card just to have a look. Shows bearish still. 66 RSI, 20%, 27%. Okay. Gonna move in closer. Have a look to see what's going on. So actually the weekly has moved here. There's your pivots. There's your weekly resistance 2, weekly resistance 3, which is above all of these. So, I mean, this is on the daily. It's not a super narrow, so it's not going to meet that area. And we'll look on the 1 hour. Okay, here we go. Here's an interesting look. So this is why I like, I love Trendix so much. Whenever you mark out all these levels, the minute you get into Trendix and you look closer with the levels, it starts to make so much more sense to me. Okay, if you have a look here, it swept the previous day high, but it's also that this mark over here is the monthly opposing level. So I don't know. See that broke through with strength, tapped into it to use that as support here. So it currently looks like it's still bullish at the moment, even though it did indicate that it's bearish. Right now, I'm not comfortable enough in order to do a short on this at all. What I would look at as well here, if you see those super narrow daily pivots, there's your R3 level. Now that to me, and especially with now prices on top, the previous day high prices on top of the monthly opposing level. Those are two high key levels. It's inside of a monthly flip zone. And it's just below a weekly opposing level. So all of these are obviously just really high key levels, but it's in accumulation at the moment. Right. So let me just go back. Accumulation, obviously looking for accumulation, manipulation, then distribution. Bearish. So this one at 65 could do a sweep and then obviously it moved out to the downside. Okay. That's why I keep going back and I always have a look at that watch list. So for me personally, you can see it tapped in here and it's dropped, it's accumulating. I would wait to see what price does above this line and obviously to see if it responds or it doesn't even reach the R3 level. This is a very, very high area of interest. Personally, I obviously I can't say whether it would go all the way up or not. I just think personally, once it breaks this, we're going to see a lot of movement. I do think that especially just after this flip zone, price could drop quite strong after if it does break this daily resistance 3. It might just tap into the weekly and then drop as well. So very good one to catch if you can. Actually, where am I going to mark this one here? No, mark it here. There we go. Let me just see Luna. Look at Luna. So it's completely rejected off that weekly opposing. Then this is your monthly opposing. It's now in the fair value gap that's inside the flip zone. Very interesting. I'm actually in this trade at the moment. Got a 40%. I did take a short. But I do believe there's going to be a bigger move on this one anyway. Sorry, anyway, just showing I had an alert there. I just wanted to show you.
And the other one that you just did, the 1000 Loon C, it
What's
also
that?
has a fair value gap on the 1 hour on my chart anyway.
Yeah. So if you have a look here, here's the fair value gap there. So the fair value gap that's inside of a flip zone, which is like a very, very high area of confidence. I don't know if that's what you're meaning.
Can you show me on your chart yours? Because I'm looking at the other coin that you were just looking at before. I'm trying to follow your chart side by side with mine.
Sorry. Say it again. What would you like me to do?
The other coin that you were just on, the
Uh,
1000 Luna C.
uh, uh, 1,000. This one, okay. Yes.
Yeah, so I marked out also it has the fair value gap on
Okay.
the top side, on the 1 hour, anyway, on mine.
No 1 hour. In relation to price or just above, yeah, been there.
Yeah, there you go.
Yeah. Okay. No, very good point. So
Well,
yeah.
I'm following videos. I'm trying to like go step by step here.
No, no, of course, yeah. I mean, it's true. Of course, like when I do it, I do the monthly, weekly, 3 day, and then I go straight to having a look to see what, it's doing on the small time frame. So I wouldn't have picked this 1 hour up personally. But for me, like I already had a lot to go with. So I'm like, cool, now I know, you know. But it's completely right. If you go down stage, and mark it out, the more detailed you get, and then you can actually pinpoint that precise like position, you're not wrong. You're doing it right, 100%.
So, for example, like for an entry anyway, would you look at when it's coming out of the accumulation? Like it's accumulating now, so bouncing between those areas. But let's say it closes a candle above that range that you have between the blue and the orange. Is
Uh,
that what, like, I just want to know more the psychology also of your entries.
okay, so look, accumulation. I'm not sure if you have done the watch the videos and the study on it, but the accumulation obviously does this chop back and forth to, build up. So as it like taps, people start entering, and then it'll tap, and then it'll close them off, and it'll hit all these stop losses, and take as much liquidity as possible. But then all of a sudden you'll get this like one like with a lot of volatility, you'll start to actually see, especially in the 1 minute, you'll start to see the coin like doing this like very fast, and then obviously whenever it's reached a point, and then as it starts dropping, and then when the minute closes, and then it starts dropping. For me, that is my entry, but it has to be over key levels. But accumulation at this point, it will reach for a higher grab here. There's no two ways about it. So entering now, the only way you can enter now is if you use low leverage, don't use a stop loss, have a lot of liquidity in your accounts that won't liquidate you, and then it will still go down to the downside. But I mean, you can't really trade like that, if you know what I mean, But it is quite a pickle to try and catch it, because a lot of people, not a lot of people. I've done it a lot of times. I sit there for hours and hours and hours and hours, and I'm looking at this thing, and I think, okay, there's the sweep, and I'll enter the sweep because now I'm just getting tired of watching this thing. And I'll enter it and I'll leave it, and I'll come back, and there would have been another sweep, and then it would have gone down. I'm like, oh man, you know. So it's yeah, just to try and identify when the manipulation happens is a really, really like you really got to like work to try and back test and really see whenever it has happened in the past. But what it doesn't do in the past that I've noticed when you back test is that you don't get to see, or I suppose you can if you look at the TDIX, what the RSI level might be at that point. So if you got a high RSI and then it's a manipulation, it's for me is also like a double confirmation. You with me?
Mm,
Yeah, so, or SMCX for instance, because if you look now, yeah, at the moment, this is the 1 hour closures. So this is already showing indication. But if you're looking at the high time frame, this is the 4 hour. So what SMC requires you to do is to wait for failure to displace, and then candle 3 closure on the 4 hour. That would be an engulfing candle too. So it would still only be like 4 hours, 45 minutes from now before the CISD would be safe enough to enter. You see, that's what that's what a very safe entry model does. And it is safe. Like if you can follow that and you do get it, and you stick to it, you'll be safe. You're 100% safe. For me, I personally just I want to catch it higher. I want to catch it more precise. I understand this model works. It's great, but um, I do believe the more and more you like have stared at charts and back tested and you understand the key levels, it you start to see it differently. You you get you it's like a language. You really get to understand what it's telling you. So I know for my like you asked me where my entries are, it's very difficult for me to explain in a way that will be like, oh, well, that makes complete sense. Let's do that. I do understand that. I really do. Um, and these sessions are purely, more for, how can I say, just using the tools in the process to get you into a position where you yourself can identify when to enter, as opposed to me saying, this is where you must enter. Like, I want to leave that up to you. That's got to be your strategy. That makes sense.
Yeah, no, I get it. I mean, I think that it's like what you say in a lot of your videos, it's a lot about patience and letting the price come to a point where, you know, you have a lot of confluences and then your chances of winning the trade are much higher.
Yeah, and look,
So,
also if you're finding a lot of tokens that are of interest and you're marking all of them out, um, in this way. Let me just show you my list here. Okay, so all of these. Sorry about my dog. Rocky. You did it. Person. Okay, so like what I do is I find these tokens and then I get that area of interest and all I do is I mark them and I find a level. But I don't enter it unless it's within an area that I'm very happy with. And I'll leave it an alert and I'll just continue and move to the next one. So I don't sit there and watch price get to the position. What ends up happening is that like after a while, so when you do all of these chartings, it's like, oh, it'll be ding, 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 and then you got to actually choose, oh, which one am I actually going to go for here? Because you can't do both. You know what I'm saying? So you don't get bored. You don't enter too early. You don't you know I don't know how can I say get impatient anymore. Well, I don't personally. I'm definitely more of an action person than Seth. Seth's definitely like the most patient person I've ever met. Um, but yeah, that's if the more that you mark, you'll get those levels and yeah, hopefully, with sometime in the week you can actually get the entry. Sometimes it happens quick, you don't even get to finish marking your chart.
mm,
Yeah, it's like that. I've taken EAX a lot and I've seen a token move like from there. And then when I looked at it again, it was over there. And immediately I go open the token and I can see it's just swept R3 level for weekly and daily. And immediately as the price drops below, I'll go and I'll put an entry in and I'll put a stop loss just before as it drops, just so I don't hit I don't lose. If anything, worst case, I might just lose on the fees. And very often, if it's moved that quickly and it's hit those R3 levels, it drops you. I catch it. But it's quite a risky thing to do. You've got to make sure you get that one, the price goes up and then drops. So once it drops a bit, you have your entry and then it's got to drop again. You've got to put that stop loss just before it. But that's only when in extreme situations. And that's really when you're playing like win and spin. But they come fast. That's not really trading. That's just like, I'm just yeah, I'm having fun, I suppose. But yeah, this is the real way, obviously, to mark the as it is now, mark this level, this one as well. You can see it looks like um, all of these are
mhm.
relative in a space that could be close to potential reversals or a sweep. A lot of them are in accumulation already. They are in accumulation. Yeah. If you have a look at these levels here, So it's just below this. I mean, there's the equilibrium. So if price, for instance, closes above that equilibrium, then it indicates that price is still looking to continue. But yeah, that's just how I look and observe them. Um, this one's pretty interesting, man. This one's going to be good as well. So you see it swept and then dropped, but it's not strong enough to completely drop. So it's found support. So it'll sweep. In my opinion, this one will sweep this level because you can see it's already reacted. It'll sweep this level. It will find support on the level. That to me will be a good indication. Then you will be waiting for a price to sweep these 2 points. But that's just, again, it's an expectation. I can't tell you that it is going to be that.
So you
Cool.
would wait for it to basically reach the key level, and then once it goes, let's say, below a CISD, you'd be doing the entry. Is that what you're saying, or
No,
what are
I'm
you
not
saying?
saying that, and I'm even going to delete any of that information off here. Look, it's not, it's no, none of the information like I've just mentioned there is like part of the curriculum or it's part of the training. Like I said, for me, it's because of these opposing and strong key levels and reaction points that I've seen here. I've always, if you go back and you back test, you'll always notice how like their price did drop. So because if you can catch on a 1 minute, all right, there we go. You see, it's like not reaching. Price swept there and dropped. Immediately, I would have entered, put a stop loss just above that, which is a very, very small stop loss, right? And it's not using it as a confirmation CISD, then like retracement into a fair value gap, which you should do. But for me, I like to try and get that sniper entry. Sometimes I don't, but I don't get stopped out. Like I don't lose more than if I do it more than 2% or something. And I find these levels very, very reactive and very responsive. If you can find those levels that are very reactive, price it always reacts when it hits it. Like but it's a backtesting thing. You really, really have to go back and look at how it's done it. And then yeah, like I say, you start to get this comfort with knowing once it hits this level, if it's a high RSI, hits this level and it drops, I'll be comfortable enough in order to try and take an entry there. But worst case scenario, taps me out and goes higher. If it taps me out, just means I'll look for another area in order to do it, and it means I'll get in at a better position. And better position means more profit. So that, for me, that's just my entry model, but it isn't something like I'm teaching at all. It isn't something I recommend. I definitely recommend to, follow either the indicator X or the SMCX as two entry models. They're very, very, very precise. Cool. What's the time now? Go safe. I'll try and do safe quick. I've got my kids on holiday now, so I've got 3 kids at home for 7 weeks, man. 7 weeks. Ooh. Anyway, they're all itching to obviously like start making some noise, so I might have to just bail. Safe. Yeah, okay. Let's have a look at safe over here. I'm just going to do a hard refresh on this. Everyone else has been pretty quiet. Is Abdul here? Abdul,
He's here. He's just not speaking today.
not speaking today. Oh, he
He said
doesn't need
something
to.
earlier, but yeah.
Yeah, he doesn't need to anymore. I mean, with 9,000% wins and stuff, I'm surprised he's even joining.
I know, right?
He's killing it. Oh, that's amazing. I must say, like, guys. I am in general, I'm seeing so many, compared to when I, came on to EAX and I started, I joined Seth. And I look through back in the history to now, man, there's just so many more people that are seemingly more successful. That's what I'm seeing compared to back in the day. Everyone was like, they were all like, "Oh, where's Pramod? He's not here." Well, this old trainer, and everybody was like freaking out when he wasn't there on a day. Where now it's not like that. Like, even if I do, man, I post like 100 different setups every day, and I don't think anybody actually looks at them because they probably got 100 of their own, which is awesome. That's the whole point. To create that independent trader. And it's really nice to see, man. I'm really happy that there's a lot of successful people and, you know, well, not as successful as Mo, but we'll get there. We'll when I grow up to be big. Safe. Someone asked me safe is really low, so RSI 48, but it doesn't look like it was. Yeah, I don't know what this one's doing. It's very unsafe to me, to be honest. Yeah, this one's on narrow pivots at the moment, and it's got you see a super narrow daily. It's inside of a weekly pivot, but it's right in the middle. Previous day high and low is obviously showing that price needs to expand out of it, but its price is in the middle at the moment. Yeah, so if anything, it would need to sweep below and then continue to the high. That's why you'll see on safe, its RSI is on 48, which is showing you that it's in the middle. So if anything, I would wait for this to hit some form of extremity. I hope that helps. Okay, guys. Uh, uh, and Joe, yeah, Joe's killing it as well, man. Joe's the one that's giving me all the signals. That's why he's making me look good. Guys. Okay. Well, thank you very much for joining. Thank you for all the questions. I really hope that this was useful. I'm going to try and see if I can't perhaps go live next week, and start doing YouTube and start airing it out in the different various medium channels that we've got. Because I'd like to start trying to get more people to see what we've got. I really believe we've got amazing and incredible tools. I just don't think the world knows about it. So I'm going to try and move it over. It might be a little bit strange, but yeah, because again, I'll be explaining the tools very slowly and in detail and so on. But I don't mind, maybe adding another session just for you guys specifically if you want to do, you don't want to go through all that learning stuff and would rather just, cool, I understand this. Let's just do some more tokens and some TA. Like I'm happy to do that as well. But yeah, just letting you guys know. Lots of love. Thanks for everything and thanks for your support. And yeah, any questions, please just let me know in the group. I'm happy to answer wherever I can. Okay. See you all in the channel. Indeed. Okay, bye guys. That's that.